Welcome back, listeners, and we're going to find out how to make some money in what is a very challenging environment. We're going to have a discussion with Peta Rose Hall, CEO of BPM Financial.
As your company makes, first of all, small business people tend to fall into the trap of thinking that when the company makes money, it is their money.
Mm-hmm.
Okay,
Big mistake.
That's fatal. You want to have some separation and run your business as if you want it to be there when you pass on.
But Peta Rose, again, there is a cultural problem in relation to this, and this came out of a study that was done at the university. It said that Jamaicans of African descent, by and large, did not see going into business as necessarily a means of wealth creation and for passing on to subsequent generations.
Right.
It was to do with the immediate family needs, to get the kids to school,
right,
and to look after the family. And once that was done, the business was disbanded.
Right, because historically that's been the nature. We don't have a lot of black-owned and family businesses that have gone on from one generation to the next. We don't. So obviously that is quite true. But this is a new day now, and I'm hoping that people who are going into business now or who are inheriting small businesses from their parents will structure their business so that it's more, it's more business-like.
But the parents encourage them not to come back.
That's true. That is true too. They do.
Go on a town, go look work.
Yes, Not only that, even in the middle class, people send their children away to school and then they don't encourage them to come back because Jamaica has nothing positive, and therefore you don't want your kids to come back to nothing. So they're encouraged to seek greener pastures.
So in terms of investment, the business that the family is in is an investment opportunity that we need to look at.
Correct. They have a lot of equity in their business, right? Because as the business grows over time, they're building their equity because the business becomes more and more valuable over time. Okay. Now, one of the ways you can do it is when the business has excess profits that are not being reinvested in the business necessarily, but can be used for investments, you build up a portfolio for the business. So you can buy a mixture of stocks, other, listed companies, larger, more mature companies with long history of profitability on the exchange. We have a lot of those. And you can mix it with government paper for liquidity purposes. And so you can actually build a portfolio for your business, which is separate from your holdings, right, over time. And that's how you build up investments for your business, because your business is going to generate excess profits at some point.
Here the other thing, Peta Rose. Investment advisors such as yourself would tell entrepreneurs like me, pay yourself first.
No, well, that's when you're saving for yourself. That's a different thing. What I'm hoping, Aldo, is that the business owner out there, initially they'll draw money from the business, but eventually the business will get to a size where they can just pay themselves a salary. That's the best way to do it. You have a salary, you get a paycheck with everybody else who works in the business, so that you're not looking at the business's cash flow as your own, okay? And that way there's a separation. So yes, you have to pay yourself first in your own savings, but the business is going to have other issues, because sometimes you look at interest rates and say, well, I don't want to take a bank loan, I'm going to reinvest some of this money in the business to retool and so on, to expand, hire people with qualifications and so on and so forth. Okay, so in the normal course of running your business, those issues will arise and you'll do some trade-offs. You might not want to use your line of credit because it's very expensive to borrow from the bank. They're still in the 20s, Bank loans to companies are still out there in their 20s. Yeah, even though interest rates have fallen on the government paper side quite a bit.
Yeah, and there's nobody pushing it down.
No. And traditionally, the banks work with very large spreads. So they make lots of money, right, off of us.
But notwithstanding all that is happening, Peter Rose, the investing is an option that we need to look at seriously. And we can't just take it for granted that just putting our money down in these inactive accounts, in these inactive places,
right,
is going to create the wealth that we're looking for, that we can pass on to subsequent generations.
I think we need to pass out our money, for want of a better term. We need to realize that we don't need to keep the $1 million necessarily, intact. We can maybe put 500,000 over here in maybe equities or whatever it is that you decide. You understand? So that there is some diversification in your mix, and there's some, when one market goes down, the idea is that hopefully the other side of your investments, that market will be doing better, and so on and so forth.
I would like to see the day, and I've said this to Marlene Street at the Jamaica Stock Exchange and to other equities individuals. I would love to see the day when you can go into a place like Tasty Patty,
yes,
and buy stocks.
Yes. Well, we're
to that level. Take it to that level where the average man on the street can walk off the road and just go in and just buy stocks.
Well, Aldo, do you know, although the stock market is 40 years old, there are a lot of people who don't even know that we have a stock market.
I know, and that for me is what I find surprising.
Well, it's not really, because it comes back to what you said earlier, which is very true, in that we're not socialized around money. Our money conversations with our kids, or the ones we had personally when we were growing up, are non-existent. The conversations people have really revolve around a piggy bank notion, which is to put the money in the piggy bank, wherever the piggy bank is. It might be a physical. For me, when I was growing up, I had a physical savings account. A lot of kids have that, right? But there's nothing wrong with that. You can put it in a savings account, and then when it builds up to a certain size that is user friendly for investment, you move the money out. Kids can invest, Kids, it's very important for kids to invest their money, because that's how it's going to grow, and they are at the best place in life because they have a long time horizon, meaning that they're not going to need that money now. They're going to need it way down in the future, and they should be in full equity, because they can take the risk of equity, because they can deal with all those market fluctuations that you'll have over time. That's the other thing, Aldo. People in Jamaica go wild when the markets go down. I don't know. It's everywhere they go wild, but here it's very pronounced, because
I ask the same question every day.
Yeah. The problem with it is, I was just reading a book just recently out on the market by a fund manager in America, and he makes the point that volatility is a part of investing. So the stock market is volatile, and it is particularly volatile in places like Jamaica, which are categorized as an emerging market. And the reason is that it is not a particularly efficient market, meaning what all of that means is that we don't have that many people in it. I think they say only 1% of the population invests in equity.
Is that by design, or it just happens that way?
Well, it happens for all the reasons we spoke about earlier. People don't know what to do with their money.
Because I know for a fact, and I know of at least one example, one experience where one person went to, based on an advice, they went with, I think it was, must be $5,000 to a stockbroker to buy some stocks. And the person was discouraged from buying stocks. Yes,
because you can't buy with 5,000. I think the charges relative to the size of the money would be too small to do your own individual thing. Remember, stocks are risky, No,
but what I think should have happened is that the person should have said to the person, let me take the 5,000 as I put in one of those accounts that you've been referring to. And every month or so you come back and you put some more in it.
I don't know if they would have to come to a fund manager like myself at DPM Financial, as opposed to a stockbroker, because remember what stockbrokers do? They don't manage money per se. And they buy and sell things for you.
And again, that again for me is another concern. There are too many players in the market.
No. You're mixing it up. You have brokers who buy and sell. That the brokerage community buys and sells, but it's usually separate it's a separate function to manage money for people.
Mm-hmm.
Because basically somebody with $5,000 should be coming to a place like BPM Financial and putting it into our equity portfolio here so they can start building up their position in equity. Because you can't get much diversification with $5,000. How many stocks are you going to buy? One?
No, the point I'm making, Peter Rose, is that that's the advice that the person should have been given.
Yes.
Rather than being turned away and said, you know,
yes,
you can't buy stocks.
All right. Let me just throw something else in the mix. Though I'm not sure if how long ago it was. I think like fund management is relatively new in Jamaica, right? Because there aren't many of us out there who actually create portfolios for people. When you go to a brokerage, you basically manage your own money. You can have an account there and you can keep buying stocks, but really you are managing your mix, you're managing your risk, everything, right? Because they're not managing it for you. They will do the transaction for you, but they're not advising you in terms of,
Peter Rose, guess what? We've been run out of the studio, you know.
Oh, dear. And we're having such a wonderful conversation.
I tell you, I'm really enjoying this, you know. We're going to have to complete this thing on Wednesday, you know. I'm not letting you go, you know.
Yes, I'd love to come back.
All right, let's come back to this on Wednesday.
Absolutely.
Oh, great.
All right.
Cool.
So we'll talk. Thanks, Aldo.
Yeah, man.
Bye-bye.
Peter Rose Hall there, CEO of BPM Financial, talking about investing